In this video, I'm going to talk about 5 scenarios when a breakout is more likely to work. Stay tuned. Hey traders, a very warm welcome to you. Okay, so I've got for you 5 scenarios here when I think a breakout is more likely to work and when I consider taking it, as opposed to very often I won't consider taking a breakout there. I've done another video before. We talked about 5 reasons when I wouldn't take a breakout, or 5 times when I wouldn't take a breakout. This is a flip side of that, and these are things that I like to see in order for me to take a breakout. So let's go. Number 1, first is when I see a catalyst. So there's a catalyst. What do I mean by that? Let's say we are in trading a stock and we have good earnings and the price has run up aggressively and we're about to break through a resistance level. That's quite good because I know there's a catalyst there. I've seen bullish price action. I've seen bullish fundamental action. Okay, I'm aboard that breakout. I feel more comfortable buying it. I've got a feeling that it's got a good chance of working. That could be the same in the currency market. Let's say interest rates have changed, or let's say jobs number, or something has influenced the value of that currency. Then I might be more inclined to trade that breakout knowing there's a lot of weight behind it, as opposed to if it approached it without any fundamental change in its valuation perception. Okay, that's a good one as well, that is, guys. You know, keep an eye out for that. Number 2, when volume is good. When we've got good volume running up to a level, so we have, we have our key level, and again, this could be upside or downside. Breakouts generally, if we're trading downside, often are much more aggressive. So it's a generalization, but you get the point. If we're pushing up to here and it's all very, very slow and we've kind of ground up to that level, I'm not really interested. I'm not interested in the way it approaches that level. Some people say it doesn't matter how it approaches it, but for me, I prefer to see it explode. This has got to be an explosion. Any pause, and then explode again. That's what I want to see. I don't want to see it grinding up to it. I like to see more momentum, more volume, more range. It's all those good things that make it a good potential trade. All right, number 3, when correlated markets are moving. So if you're trading, silver, for example, against gold and platinum, if you've got all the metals that are up heavily, and you're trading one that's approaching a level and they're still pushing, then the chances are you might well get a breakout more than if they weren't pushing as well in one big sector move or one big kind of correlated market move. Like if you're trading, mining sector, all the miners are pushing higher and you're coming up to a level and there's that extra pressure from an external sector pressure, then the chances are the breakout is more likely to work than if it was just a stock going on its own and having a little sniff of a resistance level from many days ago. So when we've got the correlated markets and moving, that goes the same for the kind of commodity currencies as well. If we're seeing commodity moves and just understanding some of the relationships between the different markets, whether you're trading the currencies, whether you're trading indices, whether you're trading commodities or stocks, just knowing what's influencing and what potentially could give them a little bit of a nudge in your direction. Don't forget, if you, as soon as you start trading above a key level, it doesn't matter really why it's trading above the key level. That just may on its own, by the fact of it doing that, bring in extra participants and cause a cascade of buyers. So number 4, we've got when prices faked the other way. I've talked about this before in a specific setup, so go and check out my previous videos on the channel, and it's a good time to subscribe, guys, if you haven't yet already. Button down there somewhere, I don't know where it is, depending on what device you're watching it on, but this one's a nice one. When prices faked out the other way, what do I mean by that? So let's say we've kind of been in this range, we've pushed the downside here below a support, then push straight back up, and now we're approaching the breakout level here. I like that because we've already tested, we've already faked out, we've already proven that sellers don't care about this low. Sellers don't perceive that as continued value. Buyers have, and so potentially they're going to get stopped out, and potentially we've got a little bit of an insight into the underlying undercurrent of supply demand for this market. And so I would prefer to take that if we'd faked out first the prior direction. I mean, that's obviously a broad range there, but it could be a flag situation, could be anything. Well, we've tested one level, failed, and then reversed. It's given me a little bit of an X-ray vision of actually what's happening with supply demand and who is waiting to do what. So that's a good one as well, guys. Number 5, when traders are trapped. So It's similar to this, but often you're going to have unique scenarios. Like if you're trading a stock, for example, and the short float is relatively high and this thing is just ripping to the upside continually, and it's coming up to a resistance level and it feels like a short squeeze. You know there's a lot of people short on it. It's gone a long way. That's not a bad time to say, hey, I'm going to take this breakout because I know there are extra participants coming in who are potentially going to drive this through that key level. And there's other times the traders attract, when a lot of traders, we had it years ago, positioned in a carry trade, it starts to unwind, everyone's coming out the same door. We have all sorts of times when this occurs, when a lot of traders are positioned in one direction, and when it goes the other way, it's just a one-way scenario, and in which case it just rips straight through resistance and support levels in like a knife through butter, because nobody cares. Everyone's just trying to get out and avoid loss. So that's something to look out for as well, and there's different scenarios that falls into. So there's 5, guys. Any more you've got, stick them in the comment section below. If you like this kind of stuff, give it a thumbs up. As I said before, consider subscribing down here, wherever it is. Some more videos from me and other traders on this channel. Take care, good trading. Most of all, keep the risk managed. I'll see you in the next one. Goodbye.